What's going on, guys, and welcome back to another video. So I want to address the 2022 stock market crash. Are we actually seeing the beginning of the 2022 stock market crash? Well, let's address that because the answer is yes and no. Are we seeing the market crash? In my opinion, the answer is no. I don't think the market's crashing. I think we're having a correction and a major correction as well. But this is actually getting a lot of people's attention wondering, do they just sell? Many people aren't actually selling at a loss at this point. They're selling and making money because they bought so long ago. But that's the worry is if they don't sell now, are they going to ride this wave back down and eventually sell out at the bottom where they're making absolutely no money? Here's what I can tell you. The stock market today was almost on a free fall. Tech stocks are down, crypto's dropping. Many investors are taking their losses and running to the hills. And I wouldn't blame them because it's a scary market. But, and I want to explain what I'm going to be doing because that's not exactly what I'm doing. Did I sell today? Yes. Am I going to sell tomorrow? Yes. Am I going to continue to buy the dip? Yes. I will do all three of those. I'm going to sell. I sold today, I will sell tomorrow, and I will continue to buy. And I want to address why that is because it's very important to understand the direction that I'm planning to take. It's also important to understand the direction that you have taken already and plan to take in the future. But let's first address what happened today and why we saw a massive sell-off happen. What actually happened was the Federal Reserve, they released their meeting minutes today. And when they did, the market just absolutely went crazy. First, they talked about how they will reduce bond holdings in the coming months. That was a shock to many. They're going to raise interest rates. We knew that. And many members are actually worried about inflation. Get this. When the jobs market is nearing full employment. So we are going to see inflation even when the jobs market is nearing full employment. That's horrible news. Now, as soon as the sell-off started, I began to get a bunch of different messages. Not just here on the YouTube channel. I got some on Facebook, got emails. I got a lot from friends and family asking what should they do. What do we do? And so I tried to explain to them exactly what I'm doing, what I recommend they do as well. And I want to address that for you guys as well. Okay? Because I don't want you to lose your money. There are two different ways to look at what's happening right now. And there's two different ways to look at this sell-off. Will we see inflation and will the Federal Reserve reduce bond holdings as quickly as they're predicting? That's one thought process. The next option. Do we believe that this was just an overreaction to things we already knew? Okay, so those are the two different methods of thinking. Here's what I want to address. Here's my take on this. First off, was this an overreaction? In my opinion, yes, this was an overreaction. But does this mean that the markets won't continue to sell off? No, absolutely not. Was this an overreaction? Yes. Do I think the markets are going to continue to sell off? Yes. Do I think there's a buying opportunity with this overreaction and sell-off? Yes. And that's where I'm going to put my money. I believe there is still a bunch of good quality companies out there, and I plan on buying this dip. But I'm going to do it strategically. So here's what I'm going to do. You do not have to follow me. This is not financial advice. Okay? Do not risk any money you can't afford to lose. If you need this money in the next month or two, don't invest it. If you need this money to buy a house and that is your lifelong goal, do not invest the money. Because even though I'm going to continue to invest, my prediction is the markets will continue to drop, but I want to be in on these before they eventually run up. Okay? I want to be in on these. I'm going to be long on almost all things I'm buying now. I'm going to continue to evaluate the market tomorrow. I'm going to see where we're trending. I will evaluate the market on Friday as well. But my expectation is on Friday, I might start buying. We're going to have a better idea on Friday what we could potentially see this market do. But here's my tip to you, to be patient. Because we don't know. We don't know if today was the bottom and all those people that sold today are going to be kicking themselves tomorrow because we see this massive run up. That could happen. Do I think it's going to happen? No. But could it? Yes. Now, the likely option for me, okay, and this is what I did today, is I'm going to continue to take some of my profits off the table. This is what I'm probably going to do tomorrow. And why I say probably is because I don't know what's going to happen tomorrow. Okay? So chances are I'm going to take some of my profits off the table tomorrow. I took some off the table today. I sold a few things at a loss. Yeah, that just comes with the territory. But I want to put my money into good growth stocks that will pay much better in the next 2 to 3 years than a recovery stock potentially running up. I did sell some recovery stocks. I did. And I sold some at pretty big gains. Now, do I wish I would have sold these potentially last week and cashed out before they started to drop? No, because then I would have had to pay taxes on that for this year, this past year. So, here's what you need to remember. I plan to not swing trade these stocks that I'm going to mention. I plan on buying these for long holds. These are things that I'm going to hold for the long term. Now, as for my swing trading strategy, am I going to continue to swing trade? Not this week. Potentially this week, it's pretty much just going to be put on hold. I'll probably put that account on hold for another week or so. I'm going to rebalance my other portfolios first, and then I'll come back to that. And the reason I say that is because swing trading takes a little bit of time. I got to do some research, look into the charts. And right now, who knows what's going to happen? They could be extremely volatile, and I could see massive gains. I could also see massive losses. So right now, I'm just going to pretty much put that on hold. I pretty much do all my swing trading on Robinhood. I will put that on hold, and I'm going to go and focus on rebalancing my other portfolios. So here's what's going to happen tomorrow and Friday. I'm going to be looking into stocks that I believe are strong buys, that I have a strong belief in. These are companies like Disney, Enphase, Tesla, Apple, even the payment company Affirm. Now, the reason I'm looking at these is because Affirm has really dropped off its high. Apple is a very strong company. I really like Apple, and I think it's a safe bet to just park your money. Tesla, that had a big drop off today as well. I think it's like a little bit over $1,000 right now. It was up over $1,200, 2 days ago, right? So we know Tesla has the ability to run up. It also has the ability to drop, but when it drops, it quickly rebounds. And it's going to get right back to that probably about $950 to $1,000 mark. We got Enphase. Enphase is still one of those companies I really like. Really like Enphase. And then we got Disney. I think Disney's a strong company. I think when Disney gets their cruise line, this is really going strong. I think they're going to be much better off. But again, I think Disney's a very strong company. They got a lot of moving parts within Disney. I think it's going to be very valuable. And I don't think Disney really lost value. I think it's a good company. Now, here's one other thing that I'm going to do. And I'm going to be taking some of my money and putting this into a good ETF. One of the ETFs that I've addressed here on this channel for a while. It's a fairly newer ETF. It's actually called the JP Morgan Equity Premium Income Fund. The ticker symbol is JEPI, J-E-P-I. Now, I'm going to put some money in here just to park it. And that's the same thing I'm going to do with like Apple. I used to do it with Amazon. Not so much. I'd rather put it in JEPI than Amazon at this point right now, just because, well, get a little bit of money back. It pays a monthly dividend. Why wouldn't I love that? Pay a monthly dividend, right? Make some money off it. But I want you to remember something. When stocks are dropping, like we're seeing over the past couple of days, okay, this is a good time to take some of your money off the table, put it into a higher conviction play that you'll be happy with waiting a year, 2 years, 5 years down the road in order to see some massive gains. And this is the struggle with what's happened in the past 2 years is we've seen the stock market have some big swings up and down. That's great. that you can make some money in a hurry and sell out, and you kind of see the stock fall down, and you buy it again and it rises back up. That's awesome. But at the same time, this is not normal. This isn't normal for the same stock to run up, drop back down, run up, drop back down. That's not normal. Now, does it happen with some stocks? Yes. But in the entire market, it's not normal. So here's what you should do. Put your money into investments that you can let sit. Don't look at your portfolio. Let it just be for a little while, right? On days where, like today, where it's red, don't look at it. Because if you look at it, it's going to cause you to sell prematurely. And chances are, you're going to sell at a loss. So, do I think this was a 2022 start to the market crash? No, I don't think it was. I think we're going to see many things correct. Tech is really selling off. But just understand, the whole market didn't sell off. When we see a stock market crash, what happens is the entire market just sells off. Okay? That's not what happened today. It was different industries, different sectors that really sold off. We still had a lot of companies that were green today. Now, were the majority red? Yes. But we still had a lot. Were the indices red? Yes, they were. But it doesn't mean we can't make money in this market. So, do I think we should be selling all our stocks now? No. Do I think we should sell, get out of the companies that we are not strong believers in? Absolutely yes. Sell out, get out of them, and put your money into safer bets, where even though it may not go up immediately, it's a safer bet because you know this is a good company. You're going to invest with them in the long term, and you're not just going to be here for a week or a month. You're going to keep your money parked for the next couple, 2, 3, 4, 5 years. So that's currently what I'm doing. Hopefully you guys, if you didn't lose that much money today, great. If you did, I'm sorry. But just understand, you only lost money if you sell. If you continue to hold, remember, you still have the same amount of shares. Right now, in these down markets, don't look at the amount of money you have, look at the amount of shares and acquire more shares. So that's all I have for you guys today. Hopefully you enjoyed this video. If you enjoy these daily uploads, do me a favor, go ahead, hit that like button. Also, click that subscribe button down below, and I'll see you guys on the next one.